Do we get stakeholders here? So these are a group of people who have interest in business activity. So the business decision, whatever decision you make as a business,
You follow.
whatever you do, they have interest in it. Please, let's focus here, please. Let's focus here.
Yes.
So whatever you do, they have interest in it. That's why we call them stakeholders. So examples of stakeholders are, one, the owners of the business. The owners of the business have invested into the business. They've put their own money into the business, yes or no? So if you have put your money into the business, you want a return on your investment,
Yes.
which is what? Profits. So for the owners of the business, their interest is the profit. So I'm going to put my money into this business because I believe that there's going to be return on my investment, which is profit. So the interest of owners of the business as a stakeholder is that they want to see the business expand, they want to see the business grow, they want to see the business making more profit. Can you just stop that, please? The more profit the business makes, the more dividends for them. So if your business is making more profit, you gain more dividend as a stakeholder. That is for the owners of the business. Do we get owners here?
Yeah.
So their interest to the business is that they want to see the business grow. And if the business can grow, it makes more profit, more return for them. Owners. Any question about owners? Good. Then we have customers. For customers, they are the kingpin of the business. Without the customers, we don't have a business. Do we have a business without customers? That's why I call them what? Kingpin. It means they are the head. Without them, we don't have a business. So what is their interest in the business? Their interest is that they want quality products at affordable prices. The interest of the owners, they want profit. For customers, they want quality products and affordable prices. So they want to buy from you. They only want to buy from you if you can sell at a reduced or fair price. Are we getting it here? You know, we're talking about businesses. They make decisions about producing a product. The owners of the business, the entrepreneurs, they are putting their money into the business because they want a return on their investment, which is profit. The more profit for them, the more return on investment. The happier they become. More profit for them, they become more happier. Yes. Do you understand? That is for the owners. For the customers, they buy from the business. Yes or no? We generate revenue from the businesses, from the customers. So we exchange goods for money. So they pay for the product, we give them the product. What comes back to us is revenue. Yes or no? Yeah. So without the customers, we don't have the business. So what are the interests of the customers to the business activity? They want quality products, affordable prices. Do we understand customers?
Yes.
The third one, employees. We can't talk about having a business without the workers. Yes or no? Yes. Labor. We talked about labor yesterday, right? So what are the interests of workers, your employees, in your business? They want to see your business grow, expand, make profit. Because the more profit your business makes, the more they could claim in terms of wages. So if the business is making more profit, they can negotiate for higher pay too. So workers, employees, they want a conducive working environment and they want a fair pay.
What's that?
Fair pay means pay them what they deserve.
Yeah.
Do we understand?
Yeah. Some people even ask for more.
Yeah, if they deserve more, you give them more. It depends on the value you put in on the desk of the company. So the more valuable you are, the better the opportunity for you to earn more.
Yeah.
Is it clear, guys? So that is for employees. We've talked about owners, they want profit. Customers, quality products, affordable prices. You can take it out. Okay, so the point is this. We talked about owners of the business. Their interest is to make profit. For customers, they want quality products, affordable prices. Employees, they want to see, they work in the business, they work in the organization. As soon as the organization is making more profit, they could claim more wages. So the bigger the company becomes, or the better, the more successful the business is, the more wages they could get as employees. And you talked about employees wanting more pay. They could get more pay if they are adding more value to the organization. I think employees are clear. Is it clear, please?
Yeah.
Then the managers. Who are the managers? They are in charge of the day-to-day running of the business. So whatever happens to the business, it's on them. So they show that the responsibility of the business. If the business is doing well, the manager is a good manager, is a great manager. If the business is going down, the manager is a poor manager.
Yeah.
So the interest of the manager is to see the business grow. Because the more the business grows, the better their CV. They become better and they become attractive to other business owners. So if the business is growing, it is good for the managers. So whatever happens to the business, it is on the manager. Do you understand managers here? Good. Then the next one, suppliers. Who are the suppliers? We talked about business to business yesterday, right? Business to business. So suppliers are those who give resources to the businesses to sell. Raw materials, components. They supply the businesses. So what is their interest? They want to be sure that most of the time, businesses might buy on credit. We call them credit suppliers or creditors. We call them creditors. This is accounting anyway. So these creditors, they sell on credit. So you pay, and credit means I buy now, I pay at a later time. I buy this pen now.
Yeah.
I'll give you the payment. I'll pay you tomorrow or after now. That is on credit. So the suppliers, when they sell on credit, before they sell on credit, they want to be sure that you are credit worthy. That as soon as you buy, you can pay back as at when due.
Yeah.
So their interest is, should we sell or not to sell?
Yeah.
So if you are coming to buy from us on credit, we need to do a background check on you. Like, oh, you don't have other creditors. Maybe because you have other creditors, that's why you are coming to us. You don't want to pay them, then you switch to coming to buy from us. To buy on credit taking and move on to the next.
Yeah.
Do you understand? So credit suppliers, they have interest in your business. They want to be sure that you can pay back as at when due. They want to be sure that you don't have a lot of creditors to pay. And they want to be sure that your business is moving. You are generating more cash inflow.
Yeah.
Do we understand suppliers here? Then the next one, financiers. We're talking about the banks. Finance simply means disbursement of cash from the surplus unit to the deficit unit. Finance simply means you have money here, but you need it here. Oh, I have a project, I need to finance my project. It simply means I have a project and I need money to execute the project. So financiers are the banks. They lend money to the businesses. So before they could lend money to you, they want to be sure that you can pay back. Do you get it? The bank will not just give you money. They give you money with collateral. They give you money with asset that you can start. Okay, you need 1 million. They might ask you for an asset worth of 5 million because of the 1 million. They don't want to lose their money. So their interest is to be sure that this customer, this business can pay back. Not only pay back the principal, also the interest. Do you get it? As soon as bank gives you money, banks do not have, money does not come from sky. It is people's money. So commercial banks, they generate money from people's money. So that's how they generate their own money. So we call it money creation. It is in economics anyway. So it simply means, as an individual, you have money, but you cannot put it in your house, you save it in the bank. As soon as you save that money into the bank will be giving it to this individual who is an entrepreneur, who has a business idea, but doesn't have money. So this individual will take the money from the bank with assets, collateral, and the ability to pay back with interest. So the interest becomes the bank's money. That's how banks make money from. That's how banks make money.
Yeah.
Do we understand?
Yeah.
So for the banks, the financiers of the banks, they want to be sure that when they give you a loan, you will be able to pay back. And if you cannot pay back, there are assets that they can easily sell to get their money.
Yeah.
Do you understand?
Yeah.
So do they have must they have interest or not? Do they need to have interest or not?
Yes.
Yeah.
They need to have interest. So they need to check what you do, because whatever decision you make can affect them. Do we understand financiers?
Yes.
And the next one, government. Government are institutions. They control the society, yes or no?
Yes.
So their interest in the business is, they want to be sure that the business is doing the right thing. Whatever the business is in, it's legal. And also, they pay taxes. Government wants to build roads, government wants to build schools, government wants to build infrastructure, government wants to build bridges. Money doesn't come from heaven. There's no money for government. Government generates money from where? From the taxes paid. So if businesses are making profits, they have to pay their taxes, what we call corporation taxes. Employees, they make money, they make income. They have to pay income taxes. So these are what government will put together to build roads, to build bridges. Customers, they pay what we call withholding tax. Value added tax, VAT. So whatever you buy, you pay tax to. I pay tax, you pay taxes. Like my electricity bill, I don't have the bill here. If I can show you, the amount I pay there is VAT on consumption. So this amount of money goes to the government purse, which government will use as public financing. So whatever government generates from businesses, from customers, from employees, they use it for public finance. They use it in building roads, schools, hospitals, bridges, infrastructure. So government has interest in whatever you do as a business, because if whatever you do you make profit from, you have to pay them taxes. Is it clear? Yeah. And the last one, the local community. What is the interest of the local community? This is a school, right? This school is in this area, maybe Alandulos or where? Okay, let's just assume this is Alandulos anyway. So the community, they want to ensure that this school that is here employ people around Alandulos. Make sure that this school helps the society positively, impacts the society positively. So they want to make sure that this school does not bring problems to the society, to the community, rather benefits to the community. Do we understand? So all these group of people, they have interest in the business activity, because business activity involves decision making by the business. So whatever decision the business makes, this group of people, it will affect them directly or indirectly. Any questions about it? Going further, we have the internal stakeholders and the external stakeholders. Here we have internal. The owners are internal, employees are internal. Managers are also what? Internal. The rest are what? External stakeholders. Is stakeholder clear? Yeah. Any question, please?